We're always told that to really win at investing, you got to be the smartest person in the room. Faster, more complex, always one step ahead. But what if that's all wrong? In this explainer, we're going to flip that idea on its head and uncover a much simpler path to wealth. It's a low IQ approach that might just be the smartest move you'll ever make.
I mean, does this feel familiar to you? It's like every single day there's some new AI company, some new tech stock you have to own. And the pressure is just relentless. You feel like you need to figure out who's going to win the AI race, the cloud wars, all of it. Honestly, it's just exhausting, right?
And that feeling of exhaustion? Well, it has a name. The source for this explainer calls it brain damage. It's that mental burnout you get from trying to solve these gigantic, impossible market puzzles, the very same puzzles that millions of other people are also trying to solve. This quote just nails that feeling of being totally overwhelmed. So let's really dig into this idea. Investing's brain damage problem is this trap we fall into, believing that if we just put in more effort, more research, more complexity, we'll get better results. But you know what? More often than not, it just leads to more stress and worse returns. And this is the core of it. This is where the brain damage comes from. You're sitting there wrestling with questions like, which AI model is going to be the one? Or, should I own more NVIDIA than AMD? But here's the secret. You don't actually need to have the answers. The market, if you just own a piece of it through an index, will figure all that stuff out for you. Okay, so if the problem is all this crazy complexity, then the solution has to be radical simplicity. And that brings us to what the source calls the low IQ secret. It's a philosophy that just cuts through all that noise like a hot knife through butter.
And here it is. This is the big idea. And the source attributes this gem to none other than Warren Buffett. It's such a powerful reminder that the goal isn't to outsmart everyone. The goal is just to have a simple, repeatable process that you can stick with for a really, really long time.
And this lays it out perfectly. Look at these two paths. On the left, you've got the high-stress, high-effort game of trying to be a genius. And on the right, it's the calm, simple approach. You own a bit of everything, you let the index do the heavy lifting for you, and you're just patient. I mean, the difference is night and day. And hey, if you need some cold, hard proof that the high IQ path is usually a dead end, look at this. According to the source, a whopping 90% of professional growth fund managers, the people paid millions to do this, failed to beat their own simple index. So you got to ask yourself, why are you playing a game that even the pros almost always lose? Okay, so this sounds great in theory, right? But how do you actually do it? Well, it starts by shifting your focus. Instead of getting caught up in the crowded, buzzy, new school tech world, the low IQ approach suggests looking for simple, easy-to-understand value in the old school economy.
Let's break this down. The new school is all about AI, insane valuations, and a million different variables you can't control. But the old school? It's about real, tangible stuff. It's commodities needed for building cities. It's defense. It's energy infrastructure. It's just easier to grasp. And the best part? It often comes with lower valuations and pays you big dividends while you wait.
And this is where the real magic happens. Patience. Things move in cycles. For years, nobody wanted anything to do with commodities. They were hated. But if you were patient, just sitting there collecting dividends, you were in the perfect spot when the cycle eventually turned. That slow, steady compounding is how you build real, low-stress wealth. Now, this whole philosophy of simplicity, it doesn't just help you find good stuff. It's also your shield. It's your defense mechanism that helps you steer clear of all the new, complicated traps Wall Street loves to cook up, especially for investors who are newer to the game. Think about it like this. Different generations have learned very different lessons from the market. Boomers got burned by the tech bubble and learned about pure speculation. Gen X lived through 2008 and saw what a real financial crisis feels like. But for a lot of younger investors, the COVID crash was this weird, super fast rebound backed by the government. They haven't really felt that prolonged, soul-crushing pain of a true bear market, and that can make you a little too confident. So here's one of those traps in action. Someone comes to you with a pitch for some new complex product, maybe something like private credit, and then they hit you with the magic words, this used to only be available to big institutions. According to our source, the second you hear that phrase, alarm bells should be screaming in your head. That's your cue to not just walk away, but to run. This quote from the source just sums it all up perfectly, doesn't it? In investing, just like in flying a plane, you stay in the game through prudence and experience, not by taking crazy, bold risks. The goal is to become an old pilot. All right, so if we're not chasing genius stock picks, and we're not buying into complex products, what's the point of getting financial advice at all? Well, it means the whole value of advice has to change.
See, good advice isn't about picking winners. It's about your life. It's about planning, connecting your money to your actual goals, and crucially, having someone to talk you off the ledge when the market gets scary. It's about flawlessly executing a simple plan and providing incredible service, being, as the source puts it, the Ritz-Carlton of your money.
So at the end of the day, this is what it all boils down to. The best investment strategy isn't the most complex one. It's not the one that sounds the smartest. It's the one that's simple, the one you actually understand, and the one that's built from the ground up to work for your life.
So I'll just leave you with this question to chew on. Take an honest look at how you're investing. Is it built for simplicity and peace of mind? Or is it causing you all of that unnecessary and totally unproductive brain damage? The choice is really up to you.